We'll call this hearing to order, and I want to thank all of you for joining us here today as we discuss tax reform and its importance on small business, and I'm very much looking forward to the testimony of our distinguished guests. Over time, our tax code has become more complex and temporary, and with tax relief being extended for 1 year or months at a time or even retroactively. Taxpayers, and particularly small business owners, repeatedly complain that this uncertainty, coupled with new taxes, regulations, and the weak economy, have made it difficult to plan or grow their companies. Small businesses are disproportionately affected by tax complexity. A study by the Small Business Administration's Office of Advocacy disclosed that small firms pay 67% more to comply with the tax code than large firms do. And the growing number of provisions, along with the fact that small firms frequently do not have an in-house accountant or tax attorney, means that small business owners must hire outside experts or add those duties to another employee's workload. For these and many other reasons, small business owners have urged Congress to address tax reform. But tax reform can mean different things to different people. And since I've been chairman, the Small Business Committee has held 10 hearings dedicated to highlighting the negative impact on complex tax code on the impact a complex tax code has had on small firms. And additionally, we have created an open mic web platform that allows small businesses from outside the Beltway to communicate with our committee on any issues affecting their businesses. Nearly all of those small businesses, whether they are here in this room or via the Open Mic Project, they have consistently asked for simplification of the tax code and reduced tax rates, both for corporations and individuals. For the past few years, many members of Congress and the administration have said that tax reform is an important agenda item. And since the beginning of the 112th Congress, the Ways and Means Committee, Chairman Dave Camp, has held over 20 hearings focusing on tax reform at all levels. He has also established 11 bipartisan working groups of members of Congress who have met with hundreds of associations, think tanks, and interested parties in an effort to put forth transparent, comprehensive, and truly bipartisan proposals to reform and simplify the tax code. And over the past few months, the Ways and Means Committee has released discussion drafts of legislation reforming corporate and individual rates, international taxes, and financial products, which leads us to why we are here today. On March 10, 2013, Chairman Camp issued a discussion draft of a tax reform plan for small businesses. As part of the larger effort to reform various portions of the tax code, this draft would, among other things, make Section 179 expensing for equipment and property permanent, simplify and expand the use of cash accounting for certain small firms, and create a unified deduction for startup and organizational expenses, and provide two options for reform of the federal tax rules applicable to pass-through businesses. This is truly an excellent place to start, and I commend Chairman Camp on his efforts so far. And I'm looking forward to hearing from all of our witnesses today and what they have to say about this draft legislation, so we can offer further recommendations to our colleagues on the tax writing committee. This is really an open and transparent process. And with that, I'll turn to Ranking Member Velasquez for her opening statement.
Thank you, Chairman Graves. And welcome.
Thank you.
The American marketplace is perpetually evolving, but while its vibrant nature has spurred growth and innovation, it has also managed to outgrow many tax policies. As a result, we often come across provisions in need of reassessment. Such is the nature of our current tax code, which must be reviewed and redesigned to be made simpler and more effective for our nation's small businesses. While some of the existing tax policies provide critical small business tax breaks, much of the code is riddled with flagrant inequities and unnecessary complexities. For small firms, this creates an obstacle to success rather than a means of encouraging growth and job creation. This committee is well aware of the challenges created by the Internal Revenue Code and the major complications it has on business planning. Given that the last major reform of the code took place in 1986, it is clear changes are long overdue and that we cannot go forward without input from small business owners and entrepreneurs. With that in mind, it is important that we continue our progress towards comprehensive tax reform to spur innovation and stimulate small businesses. Failure to take any action, however, creates greater uncertainty and dampens the outlook for small businesses. Comprehensive reform will have immediate benefits for small businesses while also serving our nation's economic objective of promoting pro-growth policies. Devoting reform efforts on a complete overhaul of the code supports our nation's job creators by allowing them to continue hiring and expanding without worrying about annual changes. Most importantly, any agreed-upon plan must ensure the extension of enhanced business expensing provisions. This will help to encourage small entities to make purchases now while also putting more money back in their pockets to invest and hire. One thing is clear as we talk about tax reform: the needs of small businesses must come first. We cannot move forward without their input, and we must fully recognize the impact of how any proposals will affect them. Small businesses are the drivers of the nation's economy, and we cannot afford to put the costs of collecting taxes on them. Instead, we should be working together to help them thrive. This entails a complete restructuring of the tax code rather than a piecemeal approach. A corporate-only method disregards the importance of pass-through entities as drivers of the economy. It will be unwise to ignore their needs during the tax reform debates because when they do well, we all do well. It is clear that small businesses and our economy can come out winners if we approach the tax reform in a comprehensive manner. It is my hope that we can address these issues immediately. If Congress acts quickly, small firms will see immediate benefits through a fairer and simpler tax code. The only reason for delay will be to keep a political issue alive. Today's hearing will hopefully start an ongoing dialogue between the small business community and policymakers regarding which tax proposals best support the success of small firms. I believe there exists an opportunity for this Congress to implement long-lasting reforms. Doing so will have immediate benefits for small businesses. It will also ensure the nation's long-term economic growth. I stand committed to working in a bipartisan way to revise policies that stifle entrepreneurship, innovation, and growth. With that, let me welcome Chairman Camp to this committee, as well as the small business owners who have taken time from their busy schedule to be here today. Thank you, and I yield back.
I'm not going to make the introduction long, but obviously starting off the hearing is the Honorable Dave Camp, who's Chairman of the Ways and Means Committee. Chairman, I appreciate you coming in. I know we're short on time, and look forward to hearing from you.
Well, thank you. Good afternoon, Chairman Graves and Ranking Member Velasquez and members of the House Small Business Committee. As a former member of the committee, it's great to be back. I also want to take a moment and thank the small business owners who will appear in the next panel. Taking time away from their business is a big deal, and they have firsthand knowledge of just how broken our tax code is, how much time and energy it takes to comply with it, and what it means for them and their employees. That means fewer resources for them to hire new workers, provide better benefits. They deserve a tax code that works for them in a better way. So I appreciate them coming to share their ideas and adding their voice to the dialogue. In preparation for today's hearing, I did a little research, and the last chairman of the Ways and Means Committee to testify before the Small Business Committee was Al Ullman in 1979. So it was nearly that long ago that Congress reformed the tax code. And instead of making the tax code better, Congress has spent the last 27 years tinkering with the code, adding special provisions, making the code less effective and less efficient. And that's something we must correct, especially for America's small businesses and their workers. Most Americans get their paychecks from a small business than any other type of business or government. And if we really want to strengthen our economy and put more money in the pocket of American workers and families, we must fix the tax code and how it treats small businesses. Last month, I released a discussion draft aimed at creating a simpler and fairer code for small businesses. The discussion draft is part of a broader, comprehensive tax reform package that significantly lowers rates for individuals, small businesses, and corporations. The goal of the draft is to spur greater job creation and higher wages by reducing the burden of the tax code and the burden that it is imposed on small business. According to the National Federation of Independent Business, tax compliance costs are 65% higher for small businesses than for big businesses, costing small business owners $18 to $19 billion per year. In addition, nearly 9 out of every 10 small businesses rely on a preparer or an outside tax preparer to do their returns. So with about half of the private sector workforce employed by small business, roughly 60 million Americans, these costs, along with a federal tax rate as high as 44.6%, are especially burdensome for a sector that has long been responsible for leading the nation out of economic downturns. The discussion draft includes a number of core provisions that are designed to simplify tax compliance for small businesses, whether organized as sole proprietorships, partnerships, LLCs, or corporations. These proposals are not partisan. Democrats and Republicans have championed these ideas, and small business organizations across the country have supported them. The core provisions in the draft would spur investment in equipment needed to grow business operations by providing permanent expensing of investment in property under Section 179 of the tax code. Simplify tax accounting practices by expanding the use of simpler cash accounting method to businesses with gross receipts of $10 million or less. Provide relief for startup organizational costs by establishing a unified deduction for these expenses. And make tax compliance easier for partners and S corporation shareholders by reordering and simplifying the due dates of tax returns for partners and S corporations. In addition, the discussion draft includes 2 separate options designed to have greater uniformity between the 2 main types of pass-through entities, S corporations and partnerships. One option is an incremental approach that improves the ability of S corporations to compete, grow, and gain access to capital by modernizing current tax rules affecting S corporations and partnerships. Option 2 is a more transformative approach that simplifies the tax treatment of non-publicly traded companies by repealing existing tax rules governing partnerships and S corporations and replacing those rules with a new, unified pass-through regime. Since we released the draft, we've actively sought feedback from the small business community. The International Franchise Association, for instance, has said, and I'm quoting, "The proposal would reduce compliance costs and provide greater certainty to the more than 8 million employees across the country who wake up every day and go to work in the franchise industry, and those Americans who aspire to become franchise business owners." And Mr. Chairman, I won't read all the comments that we've received, but I do have a packet of feedback I'm happy to share with the committee members, and I've included that in my formal testimony. Simply put, the tax code ought to be easier to understand and less expensive for small businesses to comply with, because every dollar they aren't spending on taxes and tax compliance is a dollar they have to invest in equipment, start a new production line, hire a new employee, or provide more in wages and benefits. And that's my goal for comprehensive tax reform, a simpler, fairer tax code that leads to more jobs and higher wages. Thank you very much.
I appreciate it, Chairman. And since we are obviously out of time and we've got votes, which we'll reconvene the hearing right after this. Chairman Camp does have to leave, but he has said that just submit questions in writing. His committee would be more than happy to answer them. So just do it in writing, and he'll get those answered. So thank you very much for testifying, and we stand in recess at least for 2 votes.
Okay. Thank you.
All right, we'll bring the hearing back to order. I apologize for the vote series in the middle of our hearing. It happens from time to time, but I do apologize for the delay. Our first witness on our second panel today is Mr. Sam Griffith, who's the president and CEO of the National Jet Company in LaVale, Maryland. National Jet is known for its micro-hole drilling expertise and serves the aerospace, automotive, electrical, medical, and textile industries. Mr. Griffith purchased National Jet in 1992 and currently has 24 employees. And today he's testifying on behalf of the National Tooling and Machining Association. I thank you for being here today and look forward to your testimony.
Thank you for the opportunity to testify before you today on the impact of tax reform on small businesses. My name is Sam Griffith. I'm President and CEO of National Jet Company in LaVale, Maryland. I'm also a member of the National Tooling and Machining Association, and I'm testifying here today on behalf of both my company and the NTMA. I'm also a certified public accountant. I began my career practicing as a CPA with the international firm of PricewaterhouseCoopers. National Jet Company, which I purchased in 1992, was founded in 1937. Today is an internationally known expert in precision micro-hole drilling technology. We can drill a hole in a human hair to give you an idea of size. We service primarily the aerospace, automotive, medical, and textile industries. National Jet is structured as a subchapter S corporation, which means all income flows from the company into my personal return, which puts me into a much higher tax bracket than normally would be due to the pass-through. Given my combined training as a CPA and having worked in both a C and an S corporation, provides me with a unique perspective on tax policy. The NTMA and I wholeheartedly support tax reform that includes real reform for both C corporations and pass-through companies. We desperately need lower rates, simplification of rules, and elimination of sunset provisions in the tax code. It's very difficult to plan into the future when there is such uncertainty in the tax code. Why do most businesses use a pass-through entity? The reason is obvious. The double taxation of C corporation dividends, which owners pay when they take the earnings out of the business. No one wants to pay double taxes on hard-earned income. After all, when the owner pays a higher tax rate, there's less revenue to buy equipment and hire employees. The fewer resources we have available, the more difficult it is to expand. Based on a December 2012 survey of the National Tooling Machining Association, 200 respondents identified the most used tax credits and deductions. They are Section 179 equipment expensing, bonus accelerated depreciation, R&D tax credits, Section 199 domestic production activities deduction, LIFO inventory valuation. As National Jet in 2011, we claimed $400,000 in Section 179 equipment deduction. However, in 2012, the Section 179 limit was $139,000, and the phase-out if you purchased over $560,000 in equipment. Our company needed a machine that cost $611,000, but if you purchased this equipment in 2012, we would lose Section 179 deduction because it exceeded the limit. This one piece of equipment exceeded the entire limit. Therefore, I only purchased $130,000 worth of smaller equipment to stay within the threshold of the tax provision. Then Congress, on December 30th, one day before year-end, as part of the fiscal cliff, passed a provision increasing the Section 179 to $500,000 and increased the phase-out to $2 million. Now, how could any small business react to this? One day in which to purchase a machine, weighs 36,000 pounds, transported, have electrical lines installed, have airlines installed, and then placed in service in 24 hours. No one could react to this. Small business did not get the benefit but based on this last-minute act of Congress. Another issue which receives a lot of headlines in tax reform is discussed is alternative minimum tax, AMT. Because our business is captured under AMT, we cannot claim the R&D tax credit, which would be available to us because we are a leading edge of technology. In 2012, we could have received $30,000 in R&D credits. This was lost to us because of the AMT limitation. In addition, when I hired a long-term unemployed person in my shop last year, I thought I could claim the $1,000 credit Congress passed under the Hire Act. Again, because I'm subject to AMT, I cannot claim that credit. So you give us credits for R&D, and employing workers have lost their unemployment benefits, and you take them away because of AMT. Why? As you can see, the current tax code is a maze of mismatched, complex provisions that provide disincentives to grow our businesses and hire new employees. We fully support Chairman Dave Camp's approach to push for comprehensive tax reform and applaud this committee for holding this hearing to focus on the impact of small businesses. Our greatest concern is the seeming obsession with corporate-only tax reform, a path which leaves America's small businesses and manufacturers behind. I believe we must develop a reform tax code which encourages manufacturing in America, helps our small businesses compete globally in the 21st century, and small business has a stake in this great country, and we want our voice heard. That concludes my testimony.
Thank you very much, Mr. Griffin. Our next witness is Mr. Steve Bearden, who's the president of Linemark Printing, a full-service printing and graphics communication company at Upper Marlboro, Maryland. He participates in a variety of profession-related projects and associations, such as serving as board member for the Printing and Graphics Association of the Mid-Atlantic. He is testifying today on behalf of Printing Industries of America. Welcome to the Small Business Committee.
Chairman Graves, Ranking Member Velasquez, and members of the committee, good afternoon and thank you for inviting me today. I'm Steve Bearden, President of Linemark, a privately owned union printing and graphic communications company headquartered in Upper Marlboro, Maryland. Linemark is a 27-year-old company that employs 92 workers. I'm also here as a member of the Printing and Graphics Association of the Mid-Atlantic and of the Printing Industries of America. Despite tough economic times that saw our industry lose over 75,000 jobs in the past 4 years, printing companies like Linemark are ready to come back. It's critical tax policies that are in place that will allow us to do so. Chairman Camp's overall goal of simplifying tax rules concerning small business in order to reduce the impact of tax costs and complexity is one both Printing Industries of America and I personally can and do support. My comments this afternoon will focus on 3 specific provisions of the discussion draft. The first is making permanent Section 179 expensing to allow Linemark and other small businesses to deduct investments in new equipment and property up to $250,000. This provision is vital to the future growth and job creation of my company and others like it. In the environment of a rapidly changing communications marketplace, it's vital that small printers be able to continually modernize their product and service offerings. When I say I'm in the printing business, I'm often asked if the Internet is killing off our profits. people are surprised to hear it's quite the opposite. There are tremendous growth opportunities in combining old-school ink-on-paper printing with online and social media technologies. But it takes serious capital investment in order for small printers to evolve. For example, in 2012, Linemark had purchases over $2.5 million. This included a $2.2 million printing press, a $174,000 router system, an $82,000 laminator, and a new $17,000 voice-over IP phone system. By utilizing bonus depreciation, we did have an incentive and the additional resources to make the investments in our company's future growth. In the future, we will be upgrading our digital printing presses, which is the predicted growth area in the printing industry, and we'll be adding new large format printers and expanding our bindery functions, both of which will allow Linemark to better compete in ancillary services that are critical to staying live in the new print marketplace. Small printers would benefit in their ability to grow if Section 179 expensing was made permanent. The typical printer plans on spending $50,000 to $100,000 on capital equipment this year. Generally, higher profit printers are more likely to invest in capital equipment and to invest higher amounts than lower profit printers. These profit-leading printers are most likely to create new jobs. The impact of is also positive for small suppliers that manufacture printing equipment, many of which are members of the Printing and Graphics Association Mid-Atlantic and the Printing Industries of America. The second is the provision that would simplify and expand the use of cash accounting for small business. The typical printing plant is small with around $3.3 million in annual sales and 20 employees. Many of these small firms would find new cash accounting rules helpful, as Linemark would have when it was smaller. However, I should note with this proposal, C corporations with gross receipts up to $10 million would gain the option of using cash accounting, but larger S corporations will lose it. More than 800 printing plants are S corporations and would fall into this category. Finally, the discussion draft poses two options to reform the rules for small business organized as partnerships and S corporations. Approximately 20% of the industry is comprised of sole proprietorships and partnerships. Another 5 in 10 printing firms are organized as S corporations. Linemark is a C corporation, but we do recognize that many other printing companies use the S corporation to simplify their structures. I would also like to briefly mention estate tax. The new exemption levels passed by Congress earlier this year are very helpful to companies like Linemark as I prepare for my children currently working with me to hopefully stay with the family business in the future. In conclusion, I urge this committee and all members of Congress to continue this important dialogue, maintain a strong focus on how comprehensive tax reform legislation will impact America's small printers and small business in all industries. Thank you, and I look forward to answering any questions you may have.
Mr. Chairman, it is my pleasure to introduce Mr. Tim Waters. Mr. Waters is the President and CEO of Hoffman Equipment Company located in New Jersey. The company was started in 1920 as the Hoffman Motor Transportation to deliver roofing material for installers, and it has been expanding ever since. Mr. Waters represents the third generation to run the business. He's testifying on behalf of the Associated Equipment Distributors, which represents over 500 distributor member companies. Welcome.
Good afternoon, and thank you, Chairman Graves and Ranking Member Velasquez, for organizing this important hearing and for inviting AED to participate. I also want to thank Chairman Camp for making tax reform a priority and for the transparent process he's created to gather the best ideas about how to improve the code. AED is looking forward to working with him and with all of you to achieve that objective in the weeks and months ahead. AED's members are family-owned companies like mine that sell, rent, and service construction, energy, mining, forestry, and farm equipment. We are the critical link between machinery manufacturers and the local highway contractor, home builder, and farmer, and others who put equipment to productive use. The equipment industry is dominated by closely held pass-through entities. 2/3 of our members are S-corps, LLCs, or LLPs. The average AED member organized as a partnership has fewer than 3 owners. For that reason, we believe business tax reform should not only benefit big publicly traded corporations. Tax laws affecting smaller companies and pass-through entities must be improved as well. It is AED's position that tax reform should focus on 2 broad objectives. First, simplifying the code to reduce compliance costs and unintended consequences. And second, restoring long-term certainty to allow businesses and individuals to better plan for the future. The code's complexity has driven compliance costs through the roof. In fact, the IRS itself estimates that Americans collectively spend 6 billion hours per year on tax compliance, the equivalent of 3 million full-time jobs. Indeed, the code has grown so unwieldy that Congress can't change it without negative unintended consequences. Let me give you an example specific to my industry. The Affordable Care Act established a new 3.8% tax on unearned investment income, which took effect in January 1st of this year. The purpose of this new tax was to ensure that individuals who derive their income from passive sources like stocks and beach houses wouldn't be able to avoid paying Medicare taxes. Unfortunately, the bill's drafters didn't foresee the impact the law would have on legitimate, active construction equipment companies like my own. The people who wrote the bill certainly knew that tax code generally treats rental income as passive income, but they didn't consider that over the past 25 years there's been significant shifts in the construction industry towards the renting of construction equipment. This trend has accelerated in recent years as a weak economy and uncertainty surrounding government infrastructure programs have made contractors more hesitant to buy new equipment. So despite the fact that this rental money is being earned by brick and mortar companies like my own that actively employ close to 47,000 people, the revenue is considered passive and it's therefore subject to the new 3.8% tax, which in our own case will result in an approximately $400,000 tax increase. Basically, we've become entangled in the complex web that is the U.S. tax code and find ourselves ensnared by the new tax law we were never meant to pay. Not surprisingly, one of our top reform priorities is working to resolve this issue, and we'd of course appreciate any support this committee can give. As I mentioned earlier, restoring certainty should be the second guiding priority for tax reform. 96% of our members agree or strongly agree that the uncertainty surrounding the tax code is undermining the nation's economic vitality. Certainty means many things. It means making the good parts of the code permanent and ending the practice of having so many provisions, like higher Section 179 small business expensing levels, expire on an annual basis. It means establishing a permanent tax code so we know that the things we're doing today and have been doing for years, like using last-in, first-out accounting method and deducting business interest, are going to be permissible not just a year from now, but a decade from now as well. In conclusion, tax reform should be fair, encourage business risk-taking and investment, and everyone should share in it the benefits. AED and its members look forward to working with Congress to achieve these objectives. Thank you again for the opportunity to testify today, and I'm looking forward to any questions.
Thank you very much, Mr. Waters. And our next witness is Roger Harris, who's President and COO of Paget Business Services in Athens, Georgia. He's been with Paget for more than 40 years, and after serving as president of its largest franchise in the organization, he became president of the entire franchise system in 1992. He has served twice as chairman of the Internal Revenue Advisory Council and has been called to testify numerous times before both houses of Congress on small businesses, IRS, and tax issues. Thank you for being here, and I look forward to your testimony.
Thank you, Chairman Graves and Ranking Member Velasquez. It is a pleasure to be here, and thank you for the opportunity. Paget Business Services has been providing accounting, tax planning, tax preparation, payroll services to small businesses for, as we said, almost 50 years. We define our customer as one with fewer than 20 employees, and to some people, they consider those to be mom and pop businesses. However, when you look at them collectively, I think the last study I saw said that that group of people employs 90% of the workforce. So we think as a individually, they may not be that large, but collectively, they are a powerful organization. The other interesting thing, I think, as I listen to my panel colleagues and other small business owners, is someone once told me that being a small business owner was the opportunity to do the one thing that you loved and the 99 things that you hate. And probably the top two things on the 99 list would be paying taxes and tax compliance. And so anything that we can do to simplify our small business owners' lives would be welcomed by them. And quite honestly, as we sit here on April the 10th, 5 days from the filing season, I can assure you, despite the comments that have been made about firms like ours benefiting from tax reform, we would be very happy to see a little simpler and more predictable tax system going forward. So we want to thank this committee and, of course, Chairman Camp and his committee for the work that they're doing and all of you are doing to simplify the tax code. We're particularly excited about the expansion of the cash method of accounting because for our marketplace, that would make their lives terribly simpler, because one thing they do understand is their checkbook. They understand when money comes in, it should be income, and when money goes out, it should be an expense. And the closer we can stay to that method of accounting, the better it'll be for all of us. So we're particularly pleased to see that included in Chairman Camp's proposal. We have, in fact, been trying to push that along with David Cotter from American University. In fact, we're a little more aggressive than Chairman Camp is, so we hope you would consider some of our ideas to even expand that. But we're particularly pleased to hear that is a big part of what tax reform could look like. We're also happy to see the discussion on the business structuring part of small business, because, you know, in many instances, a lot of people assume, particularly in our marketplace, that people got to where they are through a lot of planning and taking advantage of how the tax code helps them. Really, in our marketplace, it doesn't work that way, and I like to illustrate that by telling a short story. And that's that one day you're cutting your grass, and the IRS views that as a hobby. The next day, when your neighbor needs you to cut their grass, you became a sole proprietor. When more neighbors needed their grass cut and you called your friend with his lawnmower and they came and helped you, you became a partnership. And then later on, you talked to someone like us, or an attorney, and you became an S-Corp or an LLC. All through that process, your life got more and more complicated, but to the business owners, they're still just cutting grass. And that's what they want to do, and that's what they want to spend time doing, so they can cut more yards and hire more people and do more things, and less time complying with a complicated tax system. So tax reform is very much needed for small business, for people like us. We are a big supporter of what the chairman and his bill proposes. Like anything, we have some ideas that we'd like to see a little differently. We're a little concerned in one of the proposals about entity-level withholding on income, because that requires there to be a calculation of income that may or may not exist. And so we think perhaps we could do something with entity-level withholding on payments that might work better. But again, this is a great step. I echo the comments of everyone. Predictability is a huge part of the problem we face today, and anything we can do to make small businesses' life simpler, we would all welcome it. I think we all recognize there is a compliance burden that has to be met, but we have to be careful that burden does not get into something beyond what it is intended to. And as we've heard here, there can be unintended consequences that take away from that business owner focusing on that thing that got them in business in the first place, because they can help this economy grow. Again, small businesses may not hire 100 people at a time, but there's so many of them. If they could all just hire one new person over the next 12 months, this country would be a whole lot better for that. So anything we can do, and again, I want to applaud the work of Chairman Camp and his committee, and this committee particularly, and look forward to the opportunity of taking your questions, and thank you again for the opportunity to be here today.
Absolutely, and thank you all for participating today. We're now going to move into questions, and I do want to remind the committee, too, that if anybody has any questions for Chairman Camp, just submit them, and he'll be happy to get those answered. And we're going to start out with Mr. Hanna.
Thank you, Chairman. I have a question that may sound like a philosophical question, but it's not. One of the conversations that goes on around this place a lot is what wealth is, what wealth means, what the accumulation of wealth, and how much of that wealth that you accumulate is the government supposed to take away from you. I've always maintained that being in small business, while we all want to make money, it's hard to grow your business if the government doesn't let you retain things, because we all live in cyclical businesses like you, Mr. Waters, up and down. You don't know from year to year what you're going to do. And in a very real way, it's hard to run a secure business unless you're allowed to retain your earnings. And if we're taxing you at a rate of 44%, as Mr. Camp said, then add your state rates to that, and then you have to live off of it. My point is, $250,000 a year may sound like a lot of money to a lot of people, but I would like your view of what that means to you in terms of growing your business and hiring people, and how you view that kind of wealth in terms of your ability to raise your family and run your life and still grow. If that isn't too abstract.
Are you asking me specifically?
Yes, or anyone, really.
Well, I'll take a stab at it. Yeah, the cost of running a business is extraordinary and seems to grow all the time and from all angles. And it's really a very difficult world to operate a business. And in many regards, yeah, $250,000 is a lot of money, and there's a lot of people, our own employees, who don't earn anywhere near that much, and you wonder in today's economy how they make it, frankly. But in terms of operating a business, it's a drop in the bucket. It's not a lot of money at all in terms of the various expenses that you face on a day-to-day basis, for sure.
Mr. Griffith?
Well, you hit a good point there when you said 44% to the federal and then you pay the state. That's over about 50% of your money. It goes away. That's a huge silent partner out there that's taking no risk. We're taking all the risk of the business, and then we got 50% left to reinvest in our business and live off that money, and that's very difficult. $250,000 when you're a pass-through entity, you can get to that number very quickly. And also when you have two wage earners, you can get to that number very quickly. And I think that's a pretty low number to say that's a wealthy person.
Mr. Bearden?
I would agree with these gentlemen. Our business is very cyclical, so when we have good times, we do need to put away some money for times that aren't as good, and that happens. We went through a very steep drop in 2009 with our own business, and we were very fortunate to make it through there, but it got very, very tight. And if through the better years, if we would have been able to keep a little bit more money in the business, it would have helped out.
Just to add to what others have said, and I'll come back to the cash method of accounting again, it's one thing to owe taxes on money that you've earned. It's another thing to owe taxes on money that showed up on a piece of paper that you didn't have. So I think what's critically important is whatever our tax rates are, that it be based on the real money that the company generated, not some fabricated number due to some complicated tax law or accounting trick.
So you'd like the accrual method to be an option and cash method to be an option also. And you're, what is it, $5 million now, so you raise it to 10?
I mean, we would think that and again, everything's got to have exceptions for certain things, but for the most part, the closer we can allow businesses to track their cash inflows and outflows and let that be the determining factor of how much tax they owe. Not that they'll ever like paying taxes, but at least it'll be a little bit more understandable, a little more bearable, because it'll be based on the real money that they generated.
Mr. Griffith, if I have a moment left, I want to ask you something. You said that you put off making certain decisions based on the uncertainty of the tax code. I would, if you could clarify that, I would assume that means that you buy what you need regardless of the tax code, but the uncertainty changes the kind of the dynamic and makes it harder to think about.
Right. All your decisions on investments aren't necessarily driven just by taxes, but you have to have the cash to buy this equipment. And when you're sitting there and you see this deduction go away, if you purchase too much in that year, then all of a sudden you got less cash to put into that piece of equipment, and it might make the decision whether you can afford to buy it or not. And that's basically what I was getting at.
Thank you. I have no further questions. Thank you, Chairman.
Thank you, Member.
Mr. Waters, there's much talk about repealing certain tax provisions that are onerous to small businesses, such as the AMT and the state tax. However, there is a reluctance to have these taxes paid for, which builds upon our national debt and further reduces the investment that can be made for transportation or infrastructure. Higher taxes do burden businesses, but an out-of-control national debt also stifle overall growth in our economy. How do we strike an appropriate balance between the need for businesses to have lower taxes and keeping our government fiscally responsible?
And I guess that's the million-dollar question. I wish I had the answer to that, but and I don't think I do have the answer, but I do have some thoughts on that, some themes.
Nor do we.
Yeah, yes. So I think that the end of simplifying the tax code and creating certainty in the tax code is an end worthwhile in and of itself, irrespective of whether the changes are tax neutral or create tax revenue. I think that end is worthwhile, and it will benefit the economy, and ultimately will indirectly produce more revenue for the government down the road because of having greater certainty and businesses are doing better. In addition to that, though, we are very much in favor of any tax that would be directed towards infrastructure investment. we feel that investment in our infrastructure, which is in serious decay, is ultimately beneficial to the economy, and we would actually be proponents of user fees, either increased gas taxes or miles-driven taxes, that would be earmarked towards infrastructure investment, particularly our highways and bridges.
Thank you.
Thank you.
Mr. Harris, the current tax code contains sections using various definitions of a small business, either using gross receipts or number of employees. Some experts have suggested that using only one definition for a small business will make the tax code simpler. How could the use of a single definition help or hurt small businesses if this is an approach that should be considered as we move forward with tax reform?
Well, you are right. There are as many definitions of a small business, depending on who you talk to. They can all come up with a different one. We focused on employees because we thought gross receipts as a definition probably had more to do with what you sold than anything. Like if you're selling Cadillacs, it's going to be easier to get to $10 million than if you're selling candy bars. And so we looked at employees as a measure of complexity in what we thought a small business should be. And we thought that if you have one employee, it can't be too complicated. And if you have 100, it can't be too simple. But I'm not sure there is a perfect definition of small business. Maybe it would be good to at least agree on what it is, whatever that is. But I think we can all make a strong case for whatever we want it to be.
Mr. Burden, there are a variety of business classifications that entrepreneurs can choose from when incorporating their firm. How do you choose your business entity classification, and what advantages does that form offer that the other structures do not?
Our company was started as a C corporation before I was actually became the owner of the company, so we carried that on. Now what we would look at were the tax structure as far as being a pass-through or being a separate entity. And there are various advantages and disadvantages to either way. If we go to sell the company as a C corporation, we could run into an issue of double taxation. We can't take dividends out of our company without paying taxes on them twice.
So depending on how the tax reform is implemented, will you consider changing your classification?
We were considering changing just a couple years ago, but now with the latest changes in the income tax law, it's actually more expensive for us if we were an S corporation than a C corporation. So we're kind of stuck between, are we trying to get a better tax advantage for when we sell, or are we trying to get a better tax advantage right now as we run the business?
Okay. Mr. Harris, the small business tax reform proposal will make numerous changes to the S corporation rules. The draft contains two options for pass-through entities. One of them keeps the current system and the other start fresh. Is there a balance that can be struck between making changes to the S corporation rules while keeping an entity classification that caters to the small family-owned businesses?
Oh, sure, I think there can. I think as a general rule, we supported what I think was option one in Chairman Camp's white paper because it was a little easier to understand. It was more of a transition than a radical change. And again, in any of these instances, there can be pluses and minuses. What I find interesting when we talk about entity classifications is in many instances, what the small business owner wants is the entity that gives them the most protection from a legal standpoint that comes with the least burden of record keeping. And sometimes one drives the other. And to the comment made earlier, with the changing of the tax law, you think you've picked the right entity, and then the next time you turn around, you need to change because the law has changed, and now you're trying to go back and forth. So consistency would help tremendously. But I think, I don't know, maybe it's just I've done this long enough. Tinkering with the option one appeals to me a little bit more than just a radical change and trying to understand what that transition would look like.
Okay. Thank you. Thank you, Mr. Chairman.
Mr. Benvolio.
Thank you very much, Mr. Chairman. Mr. Griffiths, I think you said you were a CPA and you own a machine or tool and die company, correct? Now, let's see if I understand this right. Section 179, $500,000, if you purchase equipment, you get a deduction, right? Is that right?
Yes, sir.
So cost of a CNC machine,
$611,000 machine.
I think I read that in your testimony. There's more expensive ones, isn't it?
Oh, yes.
And a small business can buy a 40-ton stamping press?
Oh, yes.
Do you have any idea how much those cost?
Not off the top of my head, but they can range anywhere from probably in the hundreds of thousands to $1 million.
Over $1 million.
Depends on the complexity of the machine and type.
Right. As well as the die.
Yes.
You know, the die can cost $500,000,
Absolutely.
correct? And you need that die in order to stamp, to make a product that adds to the, well, productivity,
Right.
Manufacturing.
Right.
Mr. Bearden, you said that a printing press can range, well, I bought one for $300 for my office, right? And they can go, commercial grade can cost?
You could go to $3 or $4 or $5 million.
Yeah, so this $500,000 deduction wouldn't really, if you bought something like that, wouldn't really make a difference, would it?
No, not if I was buying a printing press.
Right.
But
or, well, the printing, I don't know if do they call them presses now, or are they just?
yeah, they still have printing presses.
Yeah, okay, good. I know things have changed. But let's see, you touched on a concept, Mr. Griffith. You touched on a concept not often talked about in your written testimony, how your tax liability impacts your ability to obtain financing. Could you expand a little on this issue?
Well, yes. If when you have to use your cash to pay your taxes, it leaves you a lot less capital to reinvest in the business. And so when you go out to borrow money, they look at your liabilities, they look at your assets, and they determine whether or not you can repay the loan. And so the more cash that goes out the door for a non-accruing asset or something that's a dead expense like that, the less you have to work with, the more difficult it is to get to financing.
Thank you very much. And you noted in your written testimony, and I think I touched on this, written testimony that Congress passed a provision increasing the deduction allowance under Section 179 to $500,000 and increased the phase-out provision to $2 million. But that was done on December 30th of last year, giving a business no time to act. That's what you said, right?
Yes, sir.
So we had to move, for instance, if I bought a 40-ton press, I mean, they can be about, what, a third the size of this room?
Right.
It weighs more than Abrams' tank, doesn't it?
Yes. And you can't, and the rule was you have to be placed in service, which means it has to be under power, ready to run. These are not plug-and-play machines.
Well, I understand.
So in a day, you couldn't react to that. That's correct.
Yeah, I was raised in manufacturing. I know exactly what you're talking about. So what would you recommend?
Well,
I want to get people back in my district working again. I'm sick and tired of driving by industrial parks that say for rent, for lease, and available. I like to see help wanted signs. So what can I do, or what can we do? What would you recommend to Chairman Camp?
Make it permanent so that we, in other words, set the 179 deduction to say at $500,000, raise the limit to more than $2 million. In other words, don't phase it out at a low level, and make it permanent so that we know year in, year out what we're working with, as opposed to 1 year it's 100. What it used to be 25,000, and then it went to 125, and then it went to 500,000. Then last year it was 139,000 with a phase out over 560. So if I bought it at $600,000 machine, then it phased out the deduction to me. Make it such that we can actually get this deduction when we do buy this equipment. Because when we buy a piece of equipment like you're talking about, a stamping press or in my case, it was a tool grinding machine, I have to hire a person to run it. So not only do I add equipment to my shop, I add employment. So by not buying that piece of equipment, I didn't hire that person. So, I think if you can make it permanent so we know what we're working with and it's not a moving target and it's not changing every year, it makes it a lot easier to manage.
And I could buy, a small business could buy a $3 million CNC machine and have 5 people in the shop, actually employing 5 people, correct?
Correct.
Right, great. Thank you very much. I yield back my time, Mr. Chairman. Thank you.
My good friend, Mr. Barber.
Well, thank you, Mr. Chairman. Thank you to the witnesses. You provide us with real-life accounts of what it's like to run a small business, and I appreciate that testimony very much. We need more of it on the Hill, I think. My wife and I ran a small business for 22 years, and so we have our own first-hand accounts of what it's like to meet the tax code challenges and the other regulatory challenges. And I'm really proud to be on this committee. I'm a new member of the committee. I asked to come on as a third committee because I really wanted to do what I could to help small businesses, not only back home but across the country. And I want to venture into an area that hasn't really been discussed today, but I think is one that's really important as we think about simplification of the code. We also have to think about new taxes that have been imposed, and you mentioned one or two of them earlier, the Affordable Care Act being one of the examples. Back home in my district, we have a business called Syncardia. It manufactures the first and only FDA-approved total artificial heart, and it took Syncardia about 30 years to get where they are today, one small investment at a time. And now they're cash flow positive, they're paying taxes, and they're saving hundreds of lives every year. But one of the issues that they face, and other businesses like them face, are taxes that stifle innovation, creativity. One example of that is a tax that's now included in the Affordable Care Act, the medical device tax, a $20 billion tax that is going to be levied on total revenues of medical device manufacturers beginning this year. And for companies like Syncardia and many others across the country, the impact of this tax would be devastating to their future innovation and success. It's a tax I believe we must eliminate, and I've co-sponsored a bipartisan bill called the Protect Medical Innovation Act to do away with that tax. So this is one example, I think, of taxes that stifle creativity and innovation. And one of the great things about our country is that small businesses are the leaders in creativity, and they really, of course, drive our economy. So really a question for any and all of the witnesses who want to comment. Could you comment on what other taxes we ought to be looking at as we simplify the code or want to do that are hurting small businesses, specifically when it comes to innovation, new ideas, new products, new kinds of assistance for people in the medical arena and every other place? I mean, I think we have them across this country. And could you each comment to your own experience on what other taxes are getting in the way of innovation? Well, I thought Mr. Harris might be the first to jump.
I'll go first, which would be a more general comment than specific to an industry that these gentlemen can speak to, is that I don't think anybody in this room likes paying taxes and would like to pay less. But what they want to know is they want to understand what they owe, be able to plan for what they owe. Clearly something like the alternative minimum tax that traps people who tried to do the best they could and tried to plan, and then they have this second tax level pop up and surprise them. So I think transparency in taxes, predictability in taxes, and not being picked on because you're in a certain industry or doing a certain thing. I think that as long as people feel like they're paying equally and they're all bearing the responsibility, but anytime we target a particular business and say you are going to pay something, I think it obviously leads to higher noncompliance because they're going to know, why me? Why isn't someone else?
You know, the issue of the medical device tax was first brought to my attention by a dentist in my district. I said, he wanted to come see me, and he said, I need to talk to you about this. And he said, it's not only going to affect my business, but my patients. Going to have to pick up additional costs, and this is why I'm really concerned about how this might affect other industries. Any other comments from any of the other witnesses?
I would just say commercial printers are domestic manufacturers, and we qualify for the 9% deduction in our net income, and I would encourage the committee to incorporate the domestic production activities deduction in their small business reform. It's something that's very helpful for us. And I would agree with the other gentleman, just stabilizing and simplifying the taxes would help out tremendously.
Very good.
You know, the complexity is a tough issue because you give us credits and then you take them away because of AMT, and that's one of the things I mentioned earlier. And that alternative minimum tax, we need to get rid of that, need to fix that because it's something that is hanging out there, and the complexity. Let's say if we buy assets in my business and I have, let's say, 1,000 assets, I have to do depreciation calculation for federal tax purposes. I do a depreciation calculation for state tax purposes because Maryland decoupled from federal. I have to do a depreciation calculation for AMT purposes, and then I have generally accepted accounting principles, which is GAAP. I have to calculate depreciation 4 times on the same asset. that's a lot of work and a lot of busy work for no reason. So why aren't we trying to look at some, simplifying and getting rid of some of the complexity so that we know what we're working with, and it doesn't take a lot of time and effort away from our businesses to comply with these kind of rules.
Thank you, Mr. Chairman.
Mr. Luke DeMar.
Thank you, Mr. Chairman, and thank all of you for being here today. It's always near to my heart when I see small business guys in front of us. Just quickly, I didn't see anything in the testimony and in the recommendations and information that Congressman Camp gave us today with regards to intellectual property. Do any of you have intellectual property and have some tax concerns about that? Probably Mr. Griffith may be the only one that actually would have something there. I don't know if you do or not, but I'm just kind of curious if there's something in that area, because it wasn't mentioned in Mr. Camp's testimony, if we need to look at something like that.
We don't have anything in that intellectual property in our business.
One of the other things I noticed, Mr. Bearden, you indicated, or mentioned anyway, that you supported estate tax changes that were made earlier. And just kind of curious if there's any changes or anything else that you'd like to see done differently with the estate taxes and how it impacted you and your business. Perhaps a little firsthand anecdote here would be informational to us as a body.
Well, just as the business hopefully grows, knowing that I can plan for that in the future and that it is permanent now is very helpful. Under the other rules, when it was running out, it was kind of up in the air. We didn't know where we would be. You almost had to pick your time, I guess. But going forward, now that it's permanent, it's much better, and it's very helpful. Thank you.
Mr. Harrison, a lot of your customers and your clients, was this an issue big to them? And do you see any things that we need to tweak on this law as well?
I think, again, as everyone has said, what they needed to know was what is the law, the constant
moving around.
Certainty. Yeah, the moving and changing levels. I mean, it made planning impossible because, again, you had better years to die than others, which is not the way we want our tax code to push people. So consistency and predictability, I'll keep coming back to that as the key thing. Very good.
Yeah, it doesn't lend itself to a good business model, a good business planning, did it? That's the way we manage around. We manage by crisis. You realize that, rather. And one of the things that's coming up shortly here that we've been discussing when we talk about revamping the tax code is perhaps doing away with some of the deductions that are in there, and then on a revenue neutral basis, lowering the tax rates and things like that. Are there some things in there in the tax code that you'd like to be willing to give up so that you could get some a lower tax rate? Is there something there that would entice you to be interested in doing? It's going to be a hot button issue. I thought maybe you guys would like to jump in on it.
Generally, we have to understand from a business standpoint that the calculation of taxes has two elements, the rate and what we're applying the rate to. And at the end of the day, if those two numbers are moving equally, the amount you write the check for doesn't change. So anything that's simpler and easier to get to, small business would appreciate. And then we can argue about what the proper rate is at that point. But we don't even know. It takes so long to come up with a number. By the time we get there, the rate's almost a secondary discussion. So I would like to see us focus on, yes, there's plenty of things that we can get rid of. The problem with getting rid of them is we don't know what the rate's going to be applied to it when we give it up. And at the end of the day, if you don't know both sides of the equation, it's hard to say I'm for this or for that because I don't know what I'm giving up and what I'm getting in return. But as a general rule, sure, make it simpler and hopefully the rates won't cause it to go up.
Anybody else want to weigh in on that? Yes, sir. Mr. Waters.
I'd like to weigh in on that. Yeah, as Mr. Harris says, it's hard to say what we're willing to give up without knowing what the rate would be.
Well, let's assume it goes down. We're not going to raise it, okay? Right. Let's assume that if you take a deduction away, you're going to lower the rate from 35 down to whatever
we
down to.
Absolutely think that restoring the highway trust fund to a reasonable level of investment is absolutely a worthwhile goal and should be part of any tax reform. And we would be willing to give up user fees and other types of things along that line to fund the highway trust fund for sure.
Okay, excellent. Did you guys want to weigh in on it?
I don't know really what I'd like to give up, but I'd like to give you a very radical opinion on one thing, and that is I'd like to see abolish the inheritance tax, estate tax. Just get rid of it.
Yeah.
Because you have to sell the farm. If you ever saw the movie Secretariat, The horse won the race, and then now all of a sudden it's worth $6 million, and she had to syndicate, effectively sell the horse to save the farm. That's criminal. And I think that we should just abolish the darn thing. And as far as what I'd give up, I'd have to see the balance. I'd like to see what's going on and what you're arriving at before I start giving up anything, and seeing where we're going with everything. But it seems like we don't have a revenue problem in this country. We have a spending problem, sir. And I think you know that, and I think everyone else here knows that. And we need to look at where our monies are going, and not really what we're doing with our expenses as much as we do the revenue. And I'm talking about any business is faced with that, and then the government certainly should be faced with that.
Very good. Mr. Bearden, you want to weigh in on it, or just okay? I see my time is up, and I certainly appreciate all of you being here today. As a small business owner myself, I know that you did build it. Thank you. Thank you, Mr. Chairman.
Mr. Payne.
Thank you, Mr. Chairman. Good afternoon, gentlemen. And it's really been interesting to listen to your testimony. And Mr. Beard and I, we share a vocation. I was a printer by trade. My uncle started a computer forms manufacturing firm in 1969 and ran up against quite a few challenges, being the only minority firm in the United States doing what we were doing at that time, and had to overcome many obstacles, some are biased and problems with him being the only minority in the field, and overcame many challenges at that time. But, you know, from one printer to another, it's good to see you here.
Thank you.
Let me say, in Mr. Waters' prepared testimony, you know, he stated that, you know, his members agree that balancing the federal budget, you know, will require spending cuts naturally, entitlement reform, and tax increases. How does the rest of the panel feel, and what are your sentiments, Mr. Griffin?
I think that definitely we need to look at tax reform and make it, you know, as we said before, make it simpler and balance the budget is very important. I think that any business, any company, any government should balance budgets, and deficit spending doesn't work. And we are basically leveraging our children's future and our grandchildren's future when we do that type of thing. So I think we need to really take a look at when you increase revenues, or when you increase taxes, rather. I think the model has been seen in the past is that the economy goes down and the government has less money to spend. When you reduce taxes, oddly enough, economy grows and the government has more money to work with. I think you need to really take a look at that. I don't think taxing increases is going to necessarily bring you more revenue. But I do believe that you need to take a look at a balanced approach. And that is, you know, whether it's revenue neutral, we need to get back to the old school of balancing a budget in all of our businesses. And I certainly couldn't survive on deficit spending. And I think that's something you need to take a look at.
Okay, thank you. Mr. Beard?
One of the things I think it would just help us in what we're looking at is just the simplification of the code and making the changes permanent. And that way we can do longer range planning. Right now, is some of the things that we've talked about here today. I mean, there are times last year, for instance, when we didn't know whether we were going to have bonus depreciation until the end of the year. So all during the year, we really couldn't make any plans to use that. If those things are set and they're permanent, we can react from our business, and that can be a positive factor to help us invest quicker and make quicker decisions. There's also a lot of time that we have to spend as business owners trying to learn the tax code and to keep up with our accountants and our CPAs. Which way is, what's happening right now? What's going to happen 6 months from now? It's not 3 years out. It's on a weekly, monthly basis on what we're doing today. So just the simplification and making that permanent would help out tremendously.
Thank you. Mr. Harris?
Well, I think everyone would like to see the federal government's budget come to balance. I'm not going to sit here and say I'm smart enough to tell you exactly how to do that. It's a lot smarter than me have not figured it out quite yet. I would say this. I think that the way I would prefer to see there be more revenue raised would be that the small businesses are paying more taxes because they're making more money as opposed to taking more of what they're making today. So I think if we can have them grow and expand, then I think they'd be happy to pay in more revenue to the government through that method.
Okay. And, Mr. Harris, you detailed a proposal that, since we're talking about making it easier and knowing, what keeping things in place, your simplified cash method that you discussed. And under this method, business checking account would be essentially their books for a small business. Can any of the panelists speak to the benefit of such a method, that simple a method, and any potential challenges with that and or benefits? Mr. Griffin?
Yeah, I guess it would definitely simplify for small business when you're dealing with a cash basis, because it's, as Mr. Harris has stated, it's cash in and then expenses out, and you can see where the money's coming and where it's going. You get rid of all of the transactions, and you have to record, like you have to book payables, you have to book accruals, or you have to depreciate assets and that type of thing. When you purchase it, you expense it. And I guess it would maybe simplify considerable businesses on a certain size. And again, as we talked earlier, how do you determine that size? But I think that it would have some merit for a small business.
Okay. Mr. Beard?
I would agree. It's simpler for a small business to use a cash accounting. Even in our business, for our internal statements, we use cash accounting to look at how the business is operating. It's very important for the business to understand its cash flows and things like that, and cash accounting takes you pretty close to that. So,
Mr. Waters?
Yeah, I agree as well. I think it's a great idea and would simplify things significantly for smaller businesses. Our business, volume exceeds the cutoff, so it would impact us directly, but it seems like a great idea to me for sure.
Thank you. Thank you very much.
Mr. Holzkamp.
Thank you, Mr. Chairman. Gentlemen, I appreciate your presence. I had a very broad question, a couple different themes we've heard here today. Obviously, one would be tax simplification as well as tax certainty. Pretty broad question, each one of you. Which of those would you consider most important and why between those two? I don't consider them separately, but generally they're discussed separately around here as two different goals. Mr. Griffith?
Well, definitely simplification is needed, and I would probably lean towards that direction. However, again, uncertainty is hard to plan if you don't know how the law is going to react given in the future. In other words, if I make a decision today, what impact will I have me 10 years from now? Will that still be the same decision? Am I still the same place? That does make it difficult, but I think the complexity is the issue you're dealing with on a day-to-day basis is more probably something I would look more as of right now.
The gentleman, Mr. Waters.
Sure. Actually, I would disagree. They're both critical topics, and we want both. But I'd rather have a complex law that I know is going to be in place for many years, and I can plan around. And I'll figure out a way to figure it out. I would have to hire a gentleman like Mr. Harris here to figure it out. But at least you have something you can plan around and make investment decisions around, as opposed to having a simple law that's going to change every December 30th, and you never know what you're going to get the following year.
Mm-hmm. How long would you need for certainty? How many years in your business? What are you looking at?
10 years? Generation?
Yeah. Always?
You're always. Start with 10.
Yes, sir. Mr. Harris, Mr. Baird?
I would agree with Mr. Waters. I think for our planning purposes, certainty would be better. If it's complex, we can figure that out and know what we're dealing with. But as long as we know what we're dealing with for some length of time, we can plan properly. And so definitely certainty in my case.
Well, Well, I guess I'm either going to break the tie or tie it up here. I think, first of all, for it to be simple, it has to have a certain element of certainty to it. I mean, if it's just simple and it can change tomorrow, it's not really simple. If I had to pick between the two, I guess I would pick certainty, because one thing I've learned in this many years of doing this is complexity doesn't bother people near as much when it makes their taxes go down as when they make their taxes go up. So there's some complexity people will accept because it helps them. But so I guess I'd pick certainty, but I'm just not sure I can be simple if it's not certain.
All right. Well, thank you, gentlemen. I appreciate that. I yield back, Mr. Chairman.
Ms. Clark.
Thank you, Chairman Graves, Ranking Member Velasquez, gentlemen. I have a simple question. We've talked a lot today about the whole idea of simplifying the tax code, especially with regard to our nation's small businesses, given the complex nature of our overall global economy. Exactly what does simple mean to you?
Okay, I'll go first. I think it's predictable, to go back to the earlier discussion, something that we can count on, something that doesn't require a business to keep records and do things they wouldn't do because it's necessary to run their business. When they're being required to do things only to comply with the tax law that they wouldn't do to run their business, it has gotten too complicated. There are certain records we need to keep to run a business, that we need to know to make sure our business is doing things properly. And to the extent that what we do as a natural part of running our business allows us at the same time to comply with the tax law, that is simple. When we're doing things only to comply, it's no longer simple.
So let me just ask there, what you're asking then is that whatever you do to document the running of your business should be adequate enough to address the tax concerns of the United States government?
In a perfect world, yes.
Okay.
There are obviously exceptions to everything, but we should focus on the idea that what can we use that already exists or is in the best business interest of that taxpayer to keep for themselves before we add something just for a compliance purpose.
Okay. Does anyone else want to answer simplicity, or are you all in agreement with Mr. Harris's definition? You agree?
I agree as well. In fact, I think Mr. Griffith cited earlier that he has to keep 4 separate depreciation schedules for one piece of machinery. And I think that's a great example of what Mr. Harris was saying, where just because the tax code is such, it's so complex and it forces you to do, to keep 4 separate depreciation schedules is crazy, and there's lots of examples throughout the tax code where.
So to the extent that we can just distill that down, so that that one depreciation schedule suffices for the purposes of the tax code, that simplifies things. Okay, let me ask one further question of you gentlemen. Do you believe that the tax code is sort of like a living, breathing document? Is that sort of your experience?
I'll go first again. Certainly from my perspective, it is definitely living and breathing, but it's about time for it to take its last breath.
It's certainly if you've seen the tax code, it's a volume.
Yeah.
So it's a lot in there. So it's definitely needs some simplification.
So to the extent that your companies, I guess, maintain a certain stability, they're doing, relatively the same year in, year out, but the tax code continues to add more, more regulation or more requirement of documentation. It's not meeting the needs of your companies, and it's becoming more burdensome to the companies with each passing year than it was. For instance, it would be more burdensome this year than it was in the preceding year. Is that your experience?
Yes. If you take, for instance, just take the Obamacare, when you have they were going to allow small businesses to get premium reductions or get credits back to pay for their premiums, and they benched it if you had more than 10 employees and less than 25. It was a phase out. Then if you had average of 25,000 average salary, phase out up to 50,000. You had a two-way computation. One was on number of employees, and then the second one was on the average salaries. Taking those together, you had to add the two together, and you have to do a very complex calculation to find out, do I get any help? And there it's just a matter of what we're talking about is it's a lot of work, and most companies in my industry did not get that because we're all over 10, and our average salaries are higher than 25,000. So there again, we're trying to comply, find out do we comply, and we do a lot of work to find out, okay, we don't get that. So I think we could get rid of a lot of that nonsense. That would help.
Anyone else have any anecdotal, something that we can put on the record to sort of examine this, or does that example suffice for all of you? Very well then. Mr. Chairman, I thank you. Gentlemen, I thank you.
Mr. Hanna.
I yield back.
Make it quick.
I will. Thank you. I have a question that all you are legitimate businesses, you pay your taxes, you're concerned or you wouldn't be here. I want to ask you about complexity and compliance in the underground economy. In Mr. Harris in particular, what's your sense of that? I mean, mine is that it's growing daily for all the reasons that you're here, but there are a lot of people who don't have to fall within compliance but I don't want to predetermine your.
Well, I think, and again, part of my background spending time with the IRS Advisory Council, I got to see it from kind of both sides, and I don't think there's any doubt that there's an underground economy, and I think that unfortunately sometimes the efforts to catch that gets in the way of doing common sense things for the honest person. But I think the more complexity you add, the more taxes you add that are unhidden, and you're just encouraging more of it, to be honest with you. The more records you have to keep, the more things you have to do. Again, we know it's out there. I've got a sense it's growing, but because of where it is, it's hard to measure.
Mm-hmm. Mr. Griffith, you have a sense of that? People you know, businesses you watch? No names, you know.
I kind of lost my train of thought there. What was exactly frame that question again?
I'm concerned that everything we do makes our laws harder to enforce and harder to comply with. Therefore, there's an incentive. I mean, Russia lowered their rates to, I think it was 17% across the board. Compliance shot through the roof. It was easier to pay your taxes and go to jail or whatever. But I mean, do you have a sense in your own communities that that's growing, or maybe you don't at all?
No, I'm not certain.
No.
Well, I'm happy to say I don't know anyone who's participating in the underground economy.
Yeah.
But and we don't either. But it does seem that your logic is intuitive. It makes sense. Yes, that if there is one out there, it's probably.
I've just seen estimates that are 30-40% of our overall economy. But that's okay. I'm good, Chairman. Thank you for the time.
Well, again, thank you to all our witnesses for being here today. Tax reform is such a critical issue to our nation's small businesses, and it's important that we continue to try to move the ball forward and provide some certainty to the small business community. In addition to the testimony that we did receive here today, we had numerous trade associations that represent thousands of small businesses that wrote letters to the committee expressing their ideas, obviously, on tax reform and simplification. And we will be including those in the hearing record and also passing those on to the Ways and Means Committee as they move forward in this process. And with that, I would ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. Without objection, that is so ordered. And with that, the hearing is adjourned. Thank you all very much.